To Chofia FS. In case you are new here, consider subscribe to this channel, like, comment, and share. This is where we simplify chart even to a layman understanding. So in today's topic, I'll be teaching you how does a market structure relate with time frame, the relationship between market structures and time frame. I've been telling you people without numbers that forex does not move at random. Forex move according to a specific time frame that a particular trader is using. Forex is just like a joint. It doesn't move at random. It moves according to that joint. It moves in respect to the joint. Can you see? If you look at this point, let me give you an instance. If you look at this point, market move from here straight to this point. Now I have hit a particular joint. You have to retrace back. This retracement is the respect of another time frame. You have to retrace back to this joint and pull up again. For this, you can consider this as a joint. Forex is a joint. Even when big banks or big boys, smart money push market, they push it to a specific or to a particular joint, or they push it in respect with a particular time frame. Can you see? So now, I told you people, like if you're a trader, make sure you choose your time frame. The time frame that you choose, let it be your trend line. For example, if I choose a daily time frame now, like I'm using this Solana chart to teach you people this particular topic, it can come in front of analysis because my teaching can come in front of when I'm teaching, I'm actually analyzing the market. Like now, if I am using daily time frame now, daily time frame is going to be my trend line. I don't want to look outside of it to figure out my trend line. I rather look below it to get my entry point. I don't want to look above it to get my entry point. Because for example now, like looking at this Solana chart, like as I usually tell you people that when you open a chart, you mark the previous trend line, right? Now that is the height of the previous trend line that is giving birth to this new trend line, right? And then this is the lows of it. Okay, now let me say that this is my trend line. This is my daily time frame. Now, I am trading according to this trend line. I'm trading according to this trend line, right? So let's go back to a lower time frame and see now. I switch back to 4-hour time frame. Can you see? We see that the reactions of the market is quite different, but it respects my higher time frame. When you are trading on a particular time frame, the time frame next to that particular time frame is always going to be your entry point, because it's just like it's the support of the higher time frame. Like for example now, when you are trading as daily time frame as your higher time frame, 4-hour time frame should be your entry point. Let me just say 4-hour support should be your entry point, because the market will not reach that daily time frame support again before it pull up. Like for example now, let's see, we see a 4-hour support on 50 moving average here, right? A 4-hour support on 50 moving average here, right? Okay, let's go back to a daily 50 moving average. Can you see? Now, if you are waiting for this market to reach this point, it might not come here again, because you are trading on this higher time frame. Now, This 4 hour will always address the higher time frame to each position. By the time the market begin to approach this daily time frame, for example, if this market move from here, and it begin to approach this level, consider it as a change of character. Consider it as a change of character, because very soon, if it break a little bit, it begin to do something of this nature. Can you see? But once this market maintain this 4 hour time frame, then your trend line continue to be valid. For example, if this market continue to maintain around this place, then the 4 hour will address daily to each position, because you are trading on daily time frame. Then it begin to goes all the way here. Once it goes up here, you wait there, you switch back to your 4 hour time frame and recalculate the positions of 4 hour time frame between daily again. This is how time frame relate with market structure. When you are trading on a particular higher time frame, you don't wait for the support. You don't wait on the support of that particular time frame to enter your market. No, you enter the market from the time frame next to that time frame that you are trading with. But mind you, your exit, you need to also recalculate your exit so that you will not violate and enters another person's or another trader's time frame, because each trader have their time frame depending the type of traders that you are. Like for example, now if you enter this market, at least your first take profit should be at this current high before the market drop, because probably this market first thing first more, this market can do something like this, can go here, right, and break this down. But once you take your profit here, or you take some part of your profit, once you break up here, you know that yes, your trend is still strong. Then you recalculate back to another trend line here again. Then that's how you continue move with your market. This is how to analyze a market structure relate to a time frame. Market structure relate to a time frame. Yes. So this is it. Like as this market is now, let me show you something. As this market, that is why I say when you are trading, consider the previous trend line. This previous trend line is the strength of this your current trend line. This previous trend line will tell you if the current trend line is over. Can you see? As we can see now, let me say this current trend line is still strong. It's still strong because it have not even reached, it have just reached the half. Can you see? It has just reached the half of the previous trend. It have just reached the half of the previous trend line. And reaching the half of the previous trend line, it have also break it above. That means looking at this market now, the upward is stronger than the downward now, because the market is trading above the pivot point.